The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Tuesday morning, just after 9 a.m. Eastern Time. Still a little stuffed up, dealing with a little bit of cold, feeling a little bit better than yesterday, on my way to recovery, but I sound like I'm a little stuffed up. But I'm going to get through the hour, man, because it's an interesting morning as usual. And what do we have, folks? We got higher prices coming at you. I think this might be the seventh straight day of higher prices, man. You talk about an acceleration to the upside. We got the S&Ps up about 8 points today, trading at 4162. We got the NASDAQ 100 up by 24. We get the Dow up by 16. The Russell up by 5. You take a look at the S&Ps, you make a run to about 4171 overnight at about 6:40 a.m. Eastern Time. We've backed off a bit. I talked about it on my program yesterday, just pulling it up. It's a critical technical area, no matter how you look at it, man. We're coming into the highs of February. Those highs, we make it to 42.08 on February 2nd, 41.94 February 3rd, and you can see we make it just right to that price point on a few different occasions before the market accelerated lower, beginning on February 16th. Now, if you just take the run that this had, if you weren't listening to the program yesterday, this is kind of the run from when Chairman Powell first appeared in front of Congress for his biannual appearance between the House and the Senate. That was March 7th. That's when he said, we're going to be higher than the market thinks, maybe for longer, etc. Markets accelerate lower. Banking crisis begins 2 days later on March 9th. What have we done, folks? We have come within 10 points of a 1 to 1.618 expansion, which also brings you right back to that line, man. That's going to be a critical area. Maybe you make it up to 4,200, a nice round number. We're right near that number right now, man, as we're going to start coming into earnings next week. We kick it off with bank earnings 9 days from right now, essentially. I think next Thursday, we really accelerate into the bank earnings. But boy, you talk about an acceleration, folks. You're talking about 300 points, essentially, from where we were, 38.50 to 41.50 in a heartbeat, man. From March 13th to April 4th, it's been quite a run. Crude continuing the rise. We're up to 81.51, pretty much right at that upper boundary line. You make it to a high on January 23rd, yes, 23rd, 82.64, as you can see, but between about $80 to $82 has been kind of that higher area for crude, and that's going all the way back to November. So we are flirting with higher prices. Very difficult to find lower prices in that crude market with a surprise cut from OPEC Plus. We got the gold contract back above 2,000. That's your daily chart. Let's put it back to a 15-minute to see the volatility. Sunday night, we're down near 1965. You make it to 2008 yesterday. We're back above 2,000 this morning. And you jump over to notes and bonds. We got a little bit of lower price, higher yield. Check out the action, man. The volatility in yields, folks, astounding. Every single day, it seems like we're getting just mammoth moves in that bond market. We're talking about a yield right now just under 3.5%. And pretty interesting, right? As in, we're almost right back to where we were yesterday's show. When I kicked off the show yesterday, we were sitting at about 3.5%. Right now, I got the exact number, 3.485. You'd round it up to 3.49%. Nonetheless, in that time, you've traded from 114.20 up a full point, and now we're down 20 ticks to 115.03. Lower price, higher yield coming at you. You jump over to the dollar index this morning. They're talking about the dollar in the den. How can you not? With the action we're getting in the dollar, the action we're getting in yields. The dollar early Sunday at 103. We just got a 101 handle overnight. We're back to 102.12 in the dollar index this morning, and we jump over to the volatility index, VIX. The VIX, we're back to an 18 handle. Interesting that we spiked higher yesterday. Market said, no, we don't need to go higher. There's no volatility premium in this market when we just go up, and that's all we do is we just go up. Nonetheless, 18.88, the price of that VIX today, technically positive by 33. Again, positive when we got positive markets. Not usually the case, right? Maybe a little fear in this market. Even with the market higher, you're seeing a VIX that's slightly elevated. Not very comfortable, the VIX being at about 1850 right now. All right, what do we got going on this morning? We'll kick it off with a note from JP Morgan. Stocks are in the calm before the storm. Now, normally I'm talking about Morgan Stanley's Wilson, right? I like him. He's had a lot to say over the last 3, 6, 9, 12 months really coming through here. But this one makes a lot of sense as well. And when you start to seeing different analysts talking about the same thing, man, a risk-on mood fueling this year's equities rally is likely to falter. This is a note. The past 2 weeks of inflows driven by a short squeeze, a fall in the VIX, equities likely to retest last year's low. Not this year's low, folks. Last year's low. Okay, let's put some things in context here. You back it up for a 3-year weekly. That's a VIX. Let's go back to the S&P. And you talk about some volatility, folks. Last year's low. Even if you don't take the spike low that we got to 35.02, because I think that was just one day, right? That was like one day, one morning that we clawed it back. Yeah, that's a tail on October 13th. Even if you don't take that, folks, you're talking about 3,600 is last year's low. Just this year's low is 3,800. That would be 360 points below where we're trading at. What's that? 8-9% hit for this year. You make it back to 3,600. What are you talking about? 560 points about? What's that? 14%, something like that. Keep your eye on it, man. We got a lot of volatility coming down the line, and it's kind of the rhetoric I've been talking about. We'll talk to our man Kevin Hincks after the first break. We've talked about technicals. We've talked about fundamentals. I like to combine both of them, folks, and I can't wrap my head around how the market thinks that we're going to cut so ferociously by the end of the year in light of where the fundamentals are. In light of that, this quote, the Fed indicated no intention to cut interest rates this year, yet risk assets are exhibiting an unprecedented rally with European stocks trading near all-time highs and U.S. stocks recovering recent losses. Kalanovic wrote in a note to clients yesterday, we expect a reversal in risk sentiment and the market retesting last year's lows in the coming months. Yeah, the next 3 or 6 months are going to be wild, man. Have some patience, folks. We're going to see some volatility, man. This is not over. We have quite a period of time that we're going to go through with these markets right now. In his view, the inflows into stocks over the past few weeks make little sense. It's kind of what I've been talking about. Now, listen, I like reading all viewpoints, okay? We've talked about it in the den. You can very rarely learn something from reading something from somebody that agrees with you, folks. I mean, that's, that's totally what's wrong with like politics 101 across the board right now. Okay. You learn something from reading something from people that differ opinions with you. That's where you get to see a different viewpoint, evaluate the points they're making. Okay. So I read them all and then you make those decisions. And when smart people start continually, when you're reading all viewpoints, okay, make similar points, maybe that's where you get to decide that opinion for yourself, okay? Inflows into stocks over the past few weeks make little sense and were largely driven by systematic investors, a short squeeze, and a decline in the VIX. Now, it's interesting you mentioned the VIX, right? Because we've been talking about it the last couple of days. You don't always see a VIX spiking higher when we have the S&P higher in the pre-market. Something going on there, okay? A drop in the VIX below 20 suggests investors believe the banking crisis is contained in the near term. However, Kalanovic characterized the present market backdrop as the calm before the storm. Yeah, you talk about it, man. Stocks brush off the financial sector risk. Now, it's worth noting the accordion-like nature of risk sentiment, where restrictive rates produce an issue for various carried trades, and the ensuing pullback in yields mitigated some of the stress. Although central banks are still communicating, there is ground to cover on fighting inflation and pushing back against the market's assumption of cuts. So the original source of stress, rates higher for longer, can re-enter the picture. What happens then, right? Stay tuned, folks. We'll be coming back talking to our man Kevin Hincks from TD Ameritrade Network. We'll be right back after the break. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got the S&P up about 7 points right now. Markets in the green. Let's jump over to our man, Kevin Hincks. Every trading day, folks, right here, 12 noon Eastern time from the TD Ameritrade Network. Fast Market with your host, Kevin Hincks, Tom White, the whole team at TD Ameritrade Network. They got some great guests, folks. They walk you through hypothetical trade setups using options. Every trade they're walking you through, folks, is talking about defined risk. And boy, we got quite a market right now. Kevin Hincks, we got green across the board yet again. Good morning.
Good morning, Tommy O'Brien. Yeah, this market is drifting as we get a fair amount of data, but not anything, like I said, Tommy, you've heard me say this before. We're in the chasm now between the end of earnings season and the start of earnings season for the first quarter. And, frankly, Jamie Dimon's letter gave a lot of topics, 43 pages, but didn't say anything new. If you watch, our programming on a daily basis, we go over all these things. And so Jamie Dimon did say, though, the banking crisis is still not over and the repercussions are coming for years to come. I think that means government regulation probably on more banks. Fees will go up, things like that. But overall, Tommy, one of our discussion topics today was since 2000, between 2000 and 2023, 565 banks have failed. So that averages about 25 per year. Now, 82% of those failures were between 2008 and 2012. But there's, a number of banks that fail every year, Tommy. And why is that? Some do a good job, some do an average job, some do a very poor job, Tommy. And that is the simplest way in every business. Right, and banking is no different. So, what Jamie Dimon's talking about, remember, he benefited from a lot of the flows that went from small banks to big, but he didn't take a victory lap. He said anything that damages the overall trust in banks damages all the banks. So, interesting letter, 43 pages. Good Lord, Tommy. But certainly a lot for Jamie Dimon to say, and a good break in a slow week.
And it's so interesting, man, just in my own head, trying to think about the fundamental nature of how that may change everything. Because, yeah, it's kind of ever present. My friends who are in industries across, all different sectors, Kevin, but we're, in business to some degree, you can't help but talk about what's going on. And it's just at the forefront of everybody's mind. So it would make sense that it's going to carry for some time, especially when you think about the stories that are out there and kind of the risk, how it was mismanaged. And as you said it, man, they're for-profit institutions. So, of course, you're going to have some managed well, some not managed well. They're trying to squeak out every dollar they can, as many businesses are. And sometimes that leads to higher risks. And with risks, as we know, sometimes there's rewards and sometimes there's not rewards with those risks, depending on how you balance them. With that in mind, you mentioned it, man, we're kind of slow on the numbers right now. This market's just drifting, Kevin, as you put it. I pull up my phone every morning, man. I pull up the Thinkorswim mobile application. I say, green across the board. Where do you see – it's interesting, Kevin, I wanted to bring up the VIX. Yesterday, we saw the VIX was a little bit elevated. Now, all things in context, yesterday you jumped from about 1850 to 1950 to start the day. But I found it interesting that the market was actually positive, and then the VIX pulled back, and we got the VIX a little bit elevated again. Seems like the VIX might be reaching the lower level. It's not quite comfortable going down from this 1850 to 19 price point. What do you think of the relationship right now with that VIX sitting at pretty low levels in terms of where we've been, as this market is just sitting, in my opinion, 4,200 we're almost at, Kevin. That's highs for the year right now. And meanwhile, maybe you could tie that into the number that we saw I was going to ask you about on Friday, because we haven't talked to you with inflation. I feel like we got a decent number, but man, there's still so much, volatility that could be coming down the line. It's so much unknown in terms of what we're dealing with. Meanwhile, we have the market figuring like, we're almost out of the woods, and I'm surmising. But yeah, what do you think about that?
Yeah, I think where you see yields right now, even though they're higher today, the 10-year is at 3.48. I mean, that is a softening of yields, right, down from their highs just at or over 4%. You've got the U.S. dollar now below 102 the last time I checked. Yeah, it's right at 102 now. So that is down off its highs. You've got, you've got the VIX at an 18 handle, still historically high, but as you know, Tommy, pretty cheap for the last 2.5 years. It's still pretty inexpensive. It's at the low end of that range. But remember, the all-time record, the all-time average for VIX is about 15.4. And as you know, I always talk about this. It's important that you understand where you are on the calendar, Tommy. We're going into spring. Spring leads to summer. We're getting to the end of the school year. So can VIX go lower? Yes, it can. It absolutely can. So I've been around long enough to trade trading options when the VIX was 10 and 11 and sitting there and the markets weren't moving. So an 18 VIX is still elevated, even though it seems very cheap, Tommy. So, but overall, the markets seem very calm as we march toward first quarter earnings season that we'll get in about another week, Tommy. But today we'll get the start of 4 straight days of data on the labor market. JOLTS today, then we'll get to ADP on Wednesday, jobless claims on Thursday, and, of course, the number one data point of the month, non-farm payrolls on Friday morning. So a lot to go on. The pace will pick up a little bit into the rest of the week, but we're going to get non-farm payrolls, Tommy, on a day where we're not trading. We're not working. So that'll be interesting as well.
Talk about a weekend, right? We go into Sunday for Easter, and you come back, and the market gets to digest all of that. Thinking a little bit bigger picture, Kevin, because I've talked to you about it before in terms of the market, what they're implying right now for the Fed, thinking maybe we have some cuts coming down the line. Let's just say, Kevin, that does not happen. I know we've talked about before, man, what would happen? Maybe you've talked about maybe an event would bring some cuts into the market with the Fed because there'd be, those dire circumstances. Let's say that does not happen, and we don't know what's going to happen. You've put it, okay, but let's say those cuts do not come, okay, sure, as many maybe say. Where do you see the market able to weather that transition at the price point it's at? And I know there's going to be a lot coming down the line in terms of inflation numbers and earnings, but do you see the ability for that market to really weather quite a change in the Fed's projected path at a price point of 4,200. I'm trying to wrap my own brain around, okay, let's say that I'm correct that we do not get those cuts. Does that mean the market has to go down? No, it doesn't, but what do you think about that relationship?
Yeah, I think the market doesn't like when interest rates move higher quickly, right? But if interest rates get stable, and can the market go higher with interest rates with the 10-year yield at 3.5 or even 4%? Yes, it can. Of course it can. It'll be based on earnings and overall economic data. But, higher rates does not mean stocks go lower. Like spiking rates mean stocks would get uncertain and they would be worried about that. But it's wrong to think that automatically higher rates mean lower stock prices. I don't think that's right at all. That doesn't mean it won't be a bumpy ride, but stocks can certainly withstand, a 10-year yield at 4, Tommy.
It's a great reply, man. 3.5%. You say, yeah, in my head, you just say, yeah, that's not that bad. What are you guys talking about at 12 today, Kevin?
Real quickly, Boeing, Lowe's, and ServiceNow.
Boeing, Lowe's, ServiceNow. Check it out, folks. 12 o'clock. Kevin, I appreciate it. We'll be watching at 12. We'll talk to you tomorrow, man.
Have a great day, Tommy.
Have a great one. We'll be right back for the open, folks.
Volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got equities open. We got the market open. We got the S&Ps up by 6. NASDAQ up by 16. Dow slightly in the red by 8 points. Of the Russell off by 4. It's a great answer by Kevin talking about the 10-year. And it is. Context is important in everything, folks. So much of our disagreements in life in general lack context, right? It's very easy to lack context and say something that appears correct, but in the context of where it belongs, that is the difficult part of many conversations. And I like how Kevin put it, man. The 10-year yield at 3.5%. If companies can't make money with yields at 3.5% in a 10-year, maybe they shouldn't be in business. Now, I'm adding that, not Kevin. But it is important to note that yield. Now, if rates start rising and we get no cuts, etc., you might see that yield shift higher as part of that, which would potentially weigh on equities. But we get to see that all play out. And the market trades a little bit lower on the opening bell, up by about 5 points on the S&P. And I just had to go back. Yeah, that's not the one. We're going to take remove that drawing. Yeah, that's the MES. No wonder. That's the one I was talking about. So put it on your calendar, man. 41.79. Patience is the name of the game, folks. We're going to get some volatility for the next 3, 6, 9, 12. We'll see how long it takes us to get out of this generational inflation, man. That is the kicker. Talked about it on my show yesterday, man. Services, core services, we're still high. We're still not even really dipping lower. So I'm not so sure a banking crisis is going to solve everyone's problems. Back to Mr. Diamond. Yeah, so Diamond, Kevin referenced it, out with his note, 43 pages, wide-ranging annual letter to shareholders. Yeah, he talks about the firm's aspirations for using artificial intelligence in ChatGPT. Ironically, banks were incented to own very safe government securities because they were considered highly liquid by regulators. They are highly liquid, but they carry duration risk, and carried very low capital requirements. Even worse, he added the Federal Reserve didn't stress test banks on what would happen if rates jump. Well, that seems like quite a blunder, right? Nonetheless, that's going to get some play. It's pretty remarkable. Diamond, 67, man, approaching 70 years old. I wonder who's going to be the next one running JP Morgan. We jump over to some of the banks this morning as we open the bell, and we got JP Morgan down a bit. Nope, we'll call it flat. We got a red candle, but we're sitting at 130.23 right now. We'll jump around to some of the other banks. Bank of America right now, basically flat. Let's see how some of the FANG stocks are trading. Apple shares, it's been quite a rocket ship, man. Apple, up another 25 pennies. Now, it's only 25 cents, folks. Apple's got 16 billion shares outstanding. You're talking about $4 billion added to market cap. It's been quite a one-way trip from Apple shares. Microsoft, down about 0.2%, we'll call it. You jump over to Google shares. Yeah, positive by about 30%. It's going to be wild to see how search, ChatGPT all plays out in the future, folks. It's a revolutionary technology, and it's not a joke, and it's going to change a lot of what we do. And you better be able to use your brain to get a job, because there are going to be so many automated services that are completely done by AI in the coming years, and technology always moves faster than you can imagine, folks. Yeah, so make sure you can use your brain, man, because everything's getting automated. I mean, you think, we're not going to have computers running everything, man. We're going to have computers running more than you can probably imagine, and it's going to change the landscape of everything, and it's coming down the line right now. All right, what else do we got pulled up here? Let's see. What are we talking about? Yeah, let's talk a little bit of Warner Brothers. So we'll talk a little bit of streamers. We'll take a look at their equity first. Warner Brothers Discovery, up a little bit today. So they're going to have a Harry Potter show here. You jump to Warner Brothers. Nears a deal for Harry Potter online TV series. I've never really been too big into it myself, but boy, I know that it's a big program and a big franchise, and they are close to closing a deal for a new online TV series based on Harry Potter. Each season of the series is going to be based on one of the 7 books, so they're going to have a season for each movie, basically, or each book. The company's hoping the series can be one cornerstone of a new streaming strategy that will be announced next week. The company's CEO, David Zaslav, and HBO chief Casey Bloys have worked to convince Rowling to produce a new series, but the deal has not been completed. And the series would allow the writers to delve further into the world of the books. And so just kind of expand on that. Anytime you can add a franchise like that to your streaming platform, folks, I think it would probably be a win. I've talked about that HBO is in a unique spot itself in terms of the the names they have, right, in terms of the quality of programming. Haven't started watching the final season of Succession yet. If you haven't checked out Succession, folks, check it out. It's just an awesome program. I think this is the 4th season, and it's going to be the final season of Succession coming up. And then there's also The Last of Us, which I've been watching as well. I think I got 1 or 2 episodes left in the final season of that one. I don't watch a lot of TV, folks. Don't have the time. But it's interesting that when I find that time to watch television, I've actually been going to HBO more so than anything else. And we have Netflix, we have Disney, we have Amazon Prime, and HBO is the one I find myself going to. And then when you get into the kids, which is interesting, HBO's got Sesame Street on there. Tommy's a big fan of Elmo on there. They have a couple others. And what HBO's done a good job of is they actually have some YouTube streamers on there. And it's interesting. You got a company like Disney, right? They got, and I'm bullish on Disney in the long term, man. But you got all of that, all of those brands, Disney, Donald Duck, etc. Everything that goes along with the Disney brand in there. They got Bluey. They got a million different cartoons. But all HBO did is they signed Sesame Street and a couple YouTube creators. And meanwhile, the kids enjoy that. They enjoy Sesame Street. They enjoy everything. So you're going to be able to compete. And HBO's in a unique spot, and they're adding potentially some Harry Potter in there, which is giving them a lift this morning. All right, we'll jump to a little bit of real estate out there. Oh, come on. Yeah. So apartment building sales dropped 74%. Interest rate increases in banking upheaval pushed down demand from multifamily buildings. And to check out the numbers, investors purchased $14 billion of apartment buildings in the first quarter of this year. That represents a 74% decline in sales from the same quarter a year earlier. Now, folks, a lot has changed from the first quarter a year ago. The Fed started hiking interest rates last March, to put things in context. So basically, we hadn't felt any of the interest rate hikes that we had from the Fed a year ago. Nonetheless, 74% drop. The largest annual sales decline for any quarter, going back to a 77% drop in the first quarter of 2009. Well, folks, we haven't had a rate hiking regime like that in forever, okay? So, of course, you're going to see the hits, and they're going to play out in different sectors of that real estate market. The lowest amount of any quarter since 2012 in terms of the first quarter sales, with the exception of the second quarter of 2020 when the pandemic hit and basically froze everything in place. But look at that drop-off, right? You look at the run we had, Q4 of 2021, absolutely remarkable, man. $115 billion multifamily building sales. First quarter of 2022 is when the hiking began. Second quarter, you hit $78 billion, and then you go what? 54, 42, 14, 13.96 to be exact. Yeah, and they make it pretty simple. The math for buying an apartment building makes a lot less sense. The cost to finance building purchases has jumped alongside the fast rise in interest rates. It's pretty simple, man. Nobody wants to take a loss when they don't have to. Yeah. We'll finish this one up when we get back from the break, folks. We'll take a look at some of the equities. Markets in the positive. S&P's up by 4. Stay tuned, folks. We'll be right back in 3 minutes.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you.
Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN. Educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the fund is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got markets rolling over a bit. You got the S&Ps negative by 1 point right now, 41.52. We're up to about 41.70. So you get back 20 points from where we were just at about 6:30 this morning. You get the NASDAQ 100 off by 19, Dow off by 21. Bitcoin holding up relatively well, 28,370 for the price of Bitcoin right now. You see just chopping around where we've been since about March 17th. Crude continuing to trade higher, 81.33 in the gold contract right now, pushing the highs we had yesterday. There you go, gold. 2007, let's put it back to an hourly to get some of those highs. And yeah, right up towards the highs right now in terms of gold. 2008, let's check out the dollar index. You know the dollar index is moving when we got gold moving. The dollar right at 102 right now. All right, we got to talk about Trump, man. So Trump, he'll be in Manhattan, expected to be arraigned at 2:15. It'll be interesting to see what's happening. The market goes a little quiet. There will be no cameras, though, so it's not going to be a total show in terms of what's going on. I'm sure every news television out there, even market news, right? I imagine Bloomberg's going to have some coverage, but there'll be no broadcast of that first hearing in there. There'll be no electronic devices allowed. Laptops and cell phones will not be permitted inside the courtroom. There's going to be an overflow room for the public and press to watch the proceedings through closed-circuit television, and news photographers are going to be able to take still photos in court before the hearing starts and in the hallway. So nonetheless, you got that one going on. He'll be in there 2:15 p.m. Eastern time, and then he'll be making a speech back in Mar-a-Lago at 8:15 tonight. So that's going to be part of the day, man. You can't deny that no matter how you feel. Yeah, we'll leave it at that, folks. Could spend a whole show on that one for sure. All right. What else do we got going on? I'm going to talk to a little bit of bond trading volatility. Let's jump to this one. So, I mean, you don't have to read this article to know we got volatility in bonds, man, but check it out. Trading volatility is the new reality for bond investors. A gauge of U.S. rates volatility reached the highest since 2008. What happened in 2008, folks? I'm telling you. 2-year Treasury yields regularly seeing outsized moves. That's to put it lightly. It's very difficult for me to come to terms, okay, as this market trades lower, for me to come to terms with a market that goes straight up when the market is so unsure of where rates should be. And, you know, when there's so much unknown, folks, the market does not like unknowns, okay? They don't like unknowns. And there is so much unknown with where rates deserve to be at this time that I stress that because it's indicative of potential bearishness in equities because the markets, again, do not like unknowns. That's it. You know, they don't like to be surprised. And there's so many surprises that could be coming down the line when you talk about rates. You take a look at this chart. Okay, this is the ICE Bank of America Move Index. Not even familiar, but nonetheless, it's talking about the outlook for yield volatility. Okay, and you blow it up. Folks, we're back to 2008. Do you remember what was going on in the market in 2008? We're above where we were coming into 2020. My goodness, right? The volatility is just bonkers, man. We're seeing it play out on a daily basis right now. We're seeing it play out across the board on a daily basis in terms of the move in the 10-year, the 2-year. And yeah, so pay attention to that one because anytime you're seeing that type of volatility, man, it's just indicative, in my opinion, of what may happen. Yeah, it's a great point, Jimmy, talking about earnings, GDP. It's all going to matter, which is so interesting, right? And it's all coming down the line. We get bank earnings next week. I don't think bank earnings have probably ever been as important as they're going to start coming down the line on Thursday. Our man Kevin Hincks is always stressing earnings, folks. The market is driven by earnings, period. End of story. We did get a decent number for the PCE last Friday. Those keep coming down the line. Yeah, you can imagine that will be a relief to the market if we finally get some headwind. But with everything going on right now, it just seems very interesting that the market is just so resilient in terms of so much unknown. Now, you know, you can battle this one out in your own head, folks, in terms of, as Kevin put it, right? It's a different story when you're not raising rates anymore and you're just not cutting, okay? That is a different story. And we haven't gotten there yet. And maybe that's the exuberance you're seeing right now, right? Maybe this exuberance is that the market's figured out, hey, we might have one more hike, and that's probably it. And I'm cool with that. I think that might be a real deal, okay? We might not even get one more hike. But we're not getting cuts, man, okay? And if the market thinks we're getting cuts and it's pricing in we're getting cuts, then what's going to happen is when we figure out we're not getting cuts, interest rates are going to go up yet again because they're going to factor in we're not getting cuts as quickly as you thought. So the 2-year doesn't deserve to be as low as maybe it's pulled back to. Maybe it deserves to be a little bit higher because we're going to hold those rates higher for longer. That would translate into the 10-year even being a little bit higher. But then what happens? Maybe the 10-year pulls lower because the higher interest rates are going to put a hurt on earnings, etc. Round and round we go, right? It's the chicken and the egg. Which one's going to happen? We get to find out, folks, to say the least. Yeah. All right, what else do we got pulled up here? Let's see what kind of articles we had pulled up. Yeah, I mean, this is, you got to talk about oil and inflation, folks, because this one I saw Sunday night, I said, man, this is going to be a tough one. And you're seeing it play out right there. Oil and inflation sparks debate on interest rate path. They're just everywhere. Okay, you had Bullard out there yesterday, right? It's an open question as to how much lasting impact OPEC Plus decision will have on inflation and interest rates, but that oil can make the Fed's inflation fight harder. So what if we had play out in less than a month? Folks, Chairman Powell was in front of Congress on March 7th. It's April 4th. March 7th, he was saying, inflation's sticky, man. We're probably going to be higher than people think and higher for longer. Since then, we've had a banking crisis, and now we have OPEC Plus putting the screws to the oil market to higher price. Both of those make the Fed's job harder. Both of those. And meanwhile, the market's going straight up over that time. Doesn't mean it's going to trade lower, folks, but the job's gotten increasingly difficult, I would say, for the Fed to manage that when all the pressure for crude has been to the downside. I mean, I pulled this up yesterday, folks. If you didn't see it on my program, let's put it back to a daily. Crude has been on a one-way trip to lower prices since last July. And you back it up even a little bit further than that to get the double top we had in there. We've had lower prices from July. And meanwhile, we just lowered at 65. And meanwhile, you're going to start potentially seeing higher headline numbers on CPI because of the energy influences. We get oil back at $100, which is like, I would say oil is more likely to reach 100 before it reaches 70, folks. And that means it's got to go $20 up versus $10 down. But the writing's on the wall, man. You're getting surprise cuts from OPEC. They're not comfortable with the price. They want it higher. It would make sense that they're not going to make life easier for Biden, no matter how you feel about politics, okay? Stick with the market, stick with the money. It would make sense they're not going to make life easy for Biden over the next year and a half. Absolutely remarkable that we got a presidential election coming in a year and a half, because you know that's going to dominate everything as we come down the line. And yeah, crude's going to be a problem. And you know what that's going to do? That's going to create a problem for higher prices, because guess what, folks? You start coming into July and you're at $100. Yeah, you're going to get comps where energy is going to be at a higher price year over year as we come into those numbers, and we're already in April. Stay tuned, folks. One more segment. We'll come right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We get the S&Ps flat. NASDAQ 100 barely in the green right now. We're going to jump to a little bit of insider selling on Signature Bank. So this one from the Journal. Signature Bank insiders sold $100 million in stock during the crypto surge. Sales went largely unnoticed by investors due to securities rules and the filing methods. My dad talked about this a couple times when it was coming out in terms of the disclosures and where they need to be. Let's see if they talk about it in here. All right, I'll pull it up afterwards, but nonetheless, folks, pay attention to them. They really break it down in the Journal, but this is the chart that you have to see, man. Net proceeds of Signature Bank stocks sold by executives and directors. You take basically The 3 years where things were rocking and rolling, $100 million of stock was sold in 3 years. So pay attention to those executives, man. Doesn't get much clearer than that. Writing was on the wall, and they're BK now. $100 million is what they closed out investors. So pay attention to that one, to put it lightly, right? To put it lightly. All right, what else are we going to finish up? Let's finish up with a little Meta. Facebook, been on quite a tear. This one from Bloomberg. Meta is the hottest tech stock in the market right now, up 140% from the lows in November. You got analysts raising the numbers in terms of what they're looking for, but I'm going to talk a little bit of PE right now, because this one I found most interesting. Trading at 17 times forward earnings, okay? Meta is below the 10-year historical average of 26. Doesn't mean they'll get back there, okay? But Amazon right now at 36 times. Microsoft, 28. Apple, 26. Yeah, and I think they're probably talking about the NASDAQ 100. Yeah, 24, okay? So pretty interesting, and that is talking about where this equity is after it has run. When you put this thing on a daily, Meta up another 0.75% today. It's a one-way rocket ship, man, from $88 to $215. You jump over to the Analyze tab, you jump over to the earnings. Meta out with their earnings on April 26th. Quite a run, to say the least. And when you look at those numbers, and one of the things they talk about in here is it's been a couple of different stories, right? But Apple's privacy deal, in terms of putting the hurt, that's already priced into this equity. It's been there for almost a year. So that deal is over. S&P's in the green by the time I'm off the show. Stay tuned, folks. Basil's coming up next. Thanks for starting your day with me. I'll see you tomorrow. Stay tuned for Basil, folks.